Good morning, everyone. My name is Marc-Andre Pelletier. I'm President and CEO of Bonterra Resources. Bonterra is a junior exploration company with significant infrastructures and a very large land package. We're located in a great region of the north of Quebec in the Abitibi Greenstone Belt.
Marc-Andre, really nice to meet you over the screen. Thank you for your introduction. It's a tough old gold market out there, and the share price of most gold juniors has been pretty beaten up. And Bonterra is in that bracket. The gold price has popped a bit, but it's still difficult market conditions. I think you might agree with that.
It is very difficult time for junior exploration company. Bonterra is one of them, like you said. Really, it started last September. We really, noticed it. We finished the year with a lot of pressure on the sell side. We had some of the shareholders that they decided to sell their stock, and that put some pressure on our stock. We have recovered a bit since then, but again this year we still see pressure on junior company. So for Bonterra, I mean, we need to adapt ourselves to the reality, which is the market, and we have made significant steps through last year, and we continue this year in cost saving and reduction of our cost, the fixed cost, the money you spend every month. And for example, the Bachelor mine that was on care maintenance last year, it was about $3 to $5 million Canadian spent every year to maintain that site. So we made the decision to shut it down. Late last year, we stopped the assay lab that was at the Bachelor. We're going to save, we're talking about $1 million a year. And so $1 million means a lot of money for a company like Bonterra. So we're doing, our ability to react to the market as is paying back. We have reduced our burn rate significantly, but it's an ongoing work. We're not done. We're going to continue to spend our money diligently.
Well, you've just announced a further curtailment of activity in terms of the infill drilling program that you started last August. Do you want to just talk about the kind of the evolution of the Barry project through last year and into this year?
Great question. When I joined the company a year ago, the strategy for the company was move toward adoption. So continue to develop our project to the next stage. We have a mill, we have significant infrastructures, we have a very large resources. So we just needed a game plan, to bring our asset to the next stage. And Barry it was by far the most advanced of our project. Contains 1.3 million ounces, significant resources, open pit and underground resource. And we have mining lease for both open pit and underground. So we published a PEA on the Barry open pit in June last year. It was fairly positive. So we made the decision to proceed to the next stage, which is a PFS. And part of the PFS process, we actually look for better pricing from the local contractors. And we realized that the cost escalation, the shortage of labor, the energy costs significantly increased since we published the PEA. So we're now about 6 months window. The cost is 50 to 100%. And the open pit project became kind of marginal. So you refer to the infill drilling. The decision was made once we paused the PFS for the Barry open pit to to focus on the underground portion, just underneath the pit. And we initiated the infill drilling, 125,000 meters drill program to better understand the geology, the grade continuity, and to see if we could eventually combine the pit and the underground into one project. So we drilled about 30,000 meters last year, 5,000 in January. And by the meantime, we continue to look at, the economics. How could the project look together? How could it work? And we concluded that because of the high pressure caused by the inflation, it was not the right time to continue spending money at the Barry Underground.
This is so interesting because in the previous cycle, or from 2004 to 2008, and that commodity cycle, the metal prices ran hard, and everyone said, well, the mining industry must be making such great profit because the commodity prices are rising. Look at the profit they're making. But the gold industry in particular saw cost inflation in line with the commodity price rises. So the margins of the companies actually stayed the same, or in some cases reduced. So what you've described is that effectively we've had this very steep rise in costs. The inflation has spiked, but it hasn't kind of the metal price that you use. You're probably using a historic looking metal price in your economics, but you're using a kind of a spot inflation price, or a spot current costs. So the margins kind of get compressed and actually go the other way. How do you view these costs in terms of the kind of the longevity of these high costs? I mean, I presumably your big costs are energy, labor, I guess kind of consumables and energy and labor. I think probably the key ones, aren't they, in terms of the operating cost? But there's also capital cost, which is steel. You
are correct about the fact that the price of gold has not increased as much as the inflation, and it's something you really have to consider when you do an economic study on a project. Barry project is very sensitive to energy because it's running on genset. So we have no hydroelectric power transmission line to the mine. Everything is running on generators, and they all are so we're talking about pure energy, really. And for a project like Barry, to operate a mine on genset increase the cost by 15 to 20%. That's one thing we concluded is, is it the right time to start that mine if it's gonna cost 15 to 20% more because we are on gensets? So the answer is no, we're not gonna do that. We're taking a responsible approach. And when I say the timing isn't right, on the positive news is there is a power line currently being built from Waswanipi transmission station up to the Windfall deposit. And that project has been announced jointly by Waswanipi and Osisko Mining. It's operated by a company named Miyuka, which is owned by the Cree Nation of Waswanipi. And we really think that is probably the best news that could happen in the urban Barry Camp, where Barry project and Gladiator are located.
Two questions. One is, what's the distance between you and Windfall? And the second question is, how long will it take to get to, first of all, Windfall and then on to you, potentially?
Gladiator is almost straight south to Windfall, and it's about 12, 15 kilometers.
Okay, really close.
And between Gladiator and Gladiator is basically straight east-west. We're talking about another 12, 15 kilometers. So we're not too far away. The power line that is being built started, I believe, in February, and it's public information, and the project should take about a year. So in a year from now, power would be definitively much closer to our project. And at that time, I think it'd be important for a company like Bonterra to look again at the project and see how we can make it work this time with the hydroelectric. But definitely a great news for the urban battery camp. I think it's a great initiative driven by a local First Nation. It's awesome.
Yeah, fantastic. And that will unlock value in the ounces that you've got in that camp.
There are 10 million ounces within 15 kilometers. Power will bring more opportunities to find more. There's no doubt. No doubt.
And meanwhile, focusing on the positives, meanwhile, you've kicked off some regional exploration with your partners, Osisko.
Yeah, we're quite excited about that. We are located in the wetland, Merlin, so it's difficult to access that type of ground. The winter time is actually the best time of the year when the ground is frozen. This winter has been very particular, and I'm sure it's maybe the same for yours, but the north of Quebec wasn't as cold as it used to be, did not get as much snow as it used to be. So we were able to put a 3,000 meters program jointly with Osisko Mining at our Duke property. Duke is basically located just north, basically between Gladiator and Windfall. It's a very large land package there, very underexplored again. And the program we put together is basically greenfield exploration. So basically no drilling has been done.
Yeah.
In that part of the region, we only have done geophysics work in the past. And we're targeting actually 10 targets with 10 holes. Very short program, but again, it goes with the weather conditions. So we're quite happy to do that now. We have 3 holes completed, so 7 more to go. And we're quite happy to do it with our joint venture partner as well. So we can share, their knowledge of the region with our knowledge of the geology as well. So,
And when will those results be coming out of the 7?
The program should be completed by mid-April at the latest, and typically a month or 2 after. It always takes a bit more time, to get the assay results. I'd say probably in May. We'll be able to provide some updates on that. Having paused the infill drilling program at Barry and refocus on exploration, once we're completed at Duke, we are going to explore just on the northeast of the Barry deposit. Again, there was very little exploration work in the past. We're focusing, drilling targets along the major faults, typically associated with mineralization. So Baggy Northeast will follow. We have a short program at our Bachelor property later in May, June. We're going to do field work this summer as well at the Bachelor. So we have such a large land package. There's so much work to do, to refocus on exploration. Hopefully we'll unlock, hopefully we'll have a new discovery or something to release.
It's funny, sometimes when you're forced into rethinking a strategy, when you're forced to move away from that kind of development path line. It gives the geological team a chance to, as you say, rethink, reimagine, to take some time out to step back and use the information, use the knowledge that's been built up within the exploration team in the close space drilling of resource definition, to actually apply it to new areas. And for the first time, they haven't got management breathing down their neck saying, we want to move into production. They're actually saying, go away and think and use your time and come up with one idea that we can test, or two ideas. And you can do that low cost, high value prospecting and geology and geochemistry that is so important in these kind of portfolio companies.
True. From between infill to exploration, there's big difference for the team. We're going to drill less meters at the end, but it's going to be in virgin ground. So, I mean, people are quite excited. We're from maybe a major discovery. We never know. I mean, the probability to find another million ounces deposit in a 10 million ounces camp
is high.
Is this. I mean, it's...
Yep. Yeah, it's the best place to look for gold is in a gold-rich environment. What's your balance sheet like? What's your treasury situation?
We are about the $6 million Canadian cash at the moment. We have account payable for probably say half of that, so 3 million, 3.5. So I'd say around 3 million net as is. We have reduced our expenses, as I mentioned before. We have reduced our program. Our burn rate is probably 50% of what it was last year, just here. So we're spending our money diligently. However, we are going to, we have no revenue, unfortunately. So we are going to have to raise money probably early in Q2.
And presumably, at the board level, you're reviewing strategic options. You've got your cash poor, asset rich. You've got lots of cards that you can play.
Like you said, when things happen, it's always a good time to stop and think. And our strategy hasn't changed, as we want to become a gold producer in short term. That's basically why I joined the company. That's basically why I think I'm good at, I like to do. And we're taking a step back to look at every single, a strategic review on, is there an asset somewhere? Is there a property that we could acquire, or a company we could merge? Is there something, a joint venture partner that could, join Bonterra and, for example, develop the Gladiator deposit, which is under a lake, and we need an exploration ramp. So we are looking at those opportunities at the moment. So we're quite thrilled to initiate that process. It's too early to talk about it, but last week I was at the PDAC, and we talked to a few people, and there are opportunities. So we have to look at them and do our homework. But it's another path that we're taking as well as a company.
Good, and of course, the gold price is the kind of the backdrop to all of this, and the events in the market. Just in the last few days, with the bank failures and the stress in the financial system, I think really underline the importance of gold as a monetary asset. And there's always the possibility, and of course the hope, that a strong gold price enables a kind of a re-rating of the gold sector back to perhaps where it was 2 years ago, because it's suffered that compression for 2 years.
True. The banks is one thing. The other thing is what's happening in Ukraine and Russia and in the States. It creates a lot of uncertainty. And I think typically geopolitics problems will help price of gold to go higher as well. So if you think about the crisis with the banks in the Ukraine war, the ongoing war in Ukraine, I mean, you're getting the right ingredients to get a much higher price of gold. I think we all know that.
I think we all know that. I mean, we may not like the the picture that causes it, but we can control what we can control. So it's really good to hear that you've reduced your burn rate, that you're undertaking this strategic review, and that you've restarted exploration.
In summary, we're quite to initiate our field program with our GV partner at Osisko at the Duke. We're really happy. Program is going well. We're taking a new approach to advance the production toward the production level. We are going to review every strategic opportunities at the moment. We like gold. We like Canada. We know United States is also a safe place to invest money. So we're basically going to take some time, to look at the opportunities to bring the company to the next stage. So we're quite excited with the plan. I mean, we keep adding weight on our activities, and I really hope our stock will eventually benefit of that. Bonterra is a different company. A different junior company, because we have infrastructures, we have mill, camps, assay lab. The value of those infrastructures, we're talking about $150 million. When you look at our current market cap, our stock should be at least 5 times higher, minimum. And on top, you're getting 3 million ounces of very large resources on top. So we're, I think there's definitively more upside with a company like Bonterra, and for a shareholder's perspective, it's the right time to join the company and become the shareholders.
Great. Well, Marc-Andre, thank you very much for the interview, and I look forward to seeing your progress during the course of the year.
Thank you. Thanks for your time.